Good morning and welcome to this exciting day where we talk about business and all the stories around the world of business. It's Business 360. My name is Blyden Okem. In Business 360 today, we'll look at the key features in the world of business, what the anticipated data releases would be for this week. We begin with the expected data releases for the week. This week, investors will focus on the earnings results from major U.S. companies such as Bank of America, Morgan Stanley, Goldman Sachs, IBM, Netflix, Tesla, and Johnson & Johnson. Additionally, it will be interesting to monitor retail sales, industrial production, and housing data, including existing home sales, housing starts, and building permits. In other news, China is set to release the second quarter GDP growth, retail sales, industrial production, and fixed asset investments. Markets will also be attentive to inflation rates in the United Kingdom, Canada, Japan, New Zealand, and South Africa, as well as other African countries, including Nigeria. Furthermore, the Central Bank of Turkey and South Africa will make decisions regarding monetary policy. Australia will publish the unemployment rates, and the UK and Canada will release retail sales data. Talking about data and their releases for this week. In Russia, Russia has taken control of the Russian subsidiary of yogurt maker Danone and beer company Carlsberg. The units have been put in temporary management of the state under a new order signed by Russian President Vladimir Putin. Moscow introduced rules earlier this year allowing it to seize the assets of firms from unfriendly countries in quotes. This came after many companies halted businesses in Russia following its invasion of Ukraine. The companies mentioned, including Carlsberg, were in the process of selling their Russian operations. Quite concerning from that angle, but it's part of the concerns of the war between Russia and Ukraine. To Twitter now. Twitter has lost almost half of its earnings, and it's been the concerns around the world, the pictures and necessity and the drive regarding Twitter. The company has lost half of its advertising revenue since it was bought by Elon Musk for $44 billion last October. Its owner has revealed this. He said the company had not seen the increase in receipts that had been expected in June, but added that July was a bit more promising. Mr. Musk sacked about half of Twitter's 7,500 staff when he took over in 2022 in an effort to cut costs. Rival app Threads now has 150 million users, according to some estimates. Its inbuilt connection to Instagram automatically gives the Meta design platform access to potential 2 billion users, and the war between Twitter and Threads continue. In Africa, with the government reportedly attracting over 20 corporations that want to invest over $20 billion in the production and sales of carbon offsets, are finally turning a profit in Tanzania. The adoption of regulation and guidelines on carbon trading in Tanzania leads to an influx of over $1 billion in price level in annual advancement, supporting the nation's commitment to reduce greenhouse gas emissions by 30 to 35% by 2030. Tanzania's vast protection and protected forests, spanning 48 million hectares, creates a lucrative market for carbon trading, offering a unique opportunity to capitalize on natural resources and drive sustainable economic growth. Still in Africa, Seychelles has announced tighter border restriction necessitating more thorough screening before allowing admission to travelers holding Nigerian passports due to concerns over organized criminal activities and drug smuggling. Nigerians with diplomatic passports and legitimate work or residency permits granted by Seychelles will still be allowed entry. Seychelles' electronic border system to conduct thorough analysis and scrutiny of Nigerian travelers, particularly those claiming to be on short vacation and exhibiting suspicious behavior. Quite a concern within Africa in the periods where African leaders are talking about free trade zones in Africa. Now to the Nigerian business outlook. Geregu Power PLC's revenue is at a state of concern, and it would form the core of the talking point and concerns all around the world and Nigeria, amid decency of performances in the market and the concerns that has to come with it. Let's look at the details of this one. Well, talking about these markets and the opportunity of Geregu, what gets to happen moving forward? The owner of Geregu has been in the right position, and we hear that date blocks shareholders' dividends and Geregu net profit drops by 11.51% in the first half of 2023. Well, the details would be that Geregu Power PLC revenue in the first half of 2023 rose to 34.69 billion naira, the electricity firm revealed in the first half financial report of the year. The company's turnover during the period increased by 2.64% compared to the 33.8 billion naira Geregu generated in the corresponding first half last year. Likewise, the firm's gross profit from January to June 2023 was 18.16 billion naira, surpassing the 16.83 billion naira reported during the same period in 2022. However, profit after tax fell by 11.51% as Geregu, a company largely owned by Femi Otedola, closed the period in review with 8.05 billion naira net profit, below the 9.1 billion naira posted in the first half last year. Meanwhile, shareholders of the company will not receive dividends this year due to the 40.085 billion naira debt Geregu owes to the bond market. It's a story around the company Geregu. Let's talk about Wema Bank now. Wema Bank has resumed the use of the Naira cards for international transactions, but placed a limit on the value of transactions permitted. Last year, Wema Bank and several other financial institutions suspended the use of Naira cards for international transactions due to the dollar crunch. This affected online transactions in Nigeria, with difficulties in accessing the United States currency. However, the Central Bank of Nigeria changing its foreign exchange policies to boost liquidity in the forex market. Banks have also started readjusting their forex operation. In an email to account holders on Friday, Wema Bank told users that it has lifted the suspension of international transactions of the Naira card, capping the monthly foreign currency spent at $500 monthly. So talking about the Central Bank of Nigeria. The Central Bank of Nigeria, CBN, has stipulated a maximum of 12 years as the tenure of the bank manages or managing director or chief executive officer CEO. In a circular dated July 13, 2023, but obtained on Saturday, the CBN also stated a maximum of 12 years tenure for the position of deputy managing director and executive director ED of a bank. The tenure review is part of a new code of corporate governance issued to banks. According to the financial regulator, the review, which takes effect on August 1, 2023, also stipulated that in the case an executive director becomes a deputy managing director, 12 years is a cumulative tenure. However, where a DME or ED becomes an MD or CEO of the same bank, based on his or her previous tenure as DME and ED, is not included in computing his or her as MD CEO, the circular stated. Now to the electricity tariff hike in Nigeria. There are strong indications the federal government will consider the request by power distribution companies for a review of that tariff, as the government's spending on electricity subsidy has risen to 2.8 trillion naira. A new report by the Nigerian Electricity Regulatory Commission, NEC, indicates that past hikes in electricity tariff by DISCO saved the government from paying additional 1 trillion naira in subsidy to power firms annually. The July 2023 NEC report provided an update on the country's tariff review journey. The Commission stated that between January 2020 and January 2023, tariff increased from 55% of costs recovery to 94%. So a good potential from that angle that it could lead to tariff hikes and reduction in subsidy from government. It would be a good time to move to global economy and look at the details in the world of economics, beginning from Asia. China's economy. The Chinese economy advanced 6.3% year-on-year in the second quarter of 2023, faster than 4.5% growth in the first quarter, but missing market estimates of 7.3%. The latest figures were distorted by a low base effect last year, when Shanghai and other big cities were in lockdown. On a seasonally adjusted basis, the economy grew 0.8%, slowing sharply from a 2.2% rise in the first quarter amid lingering property downturn, the risks of disinflation, and falling exports in China. Let's move to the chart indicating China's GDP annual growth rate. The chart this morning. The chart, according to National Bureau of Statistics of China, indicated standings of growth, annual growth at 4.8% at July 2020, went further upward to 18.7% as at January 2021, and 8.3 and 5.2 July 2021, and it began to slow down by January 2022 to 4.3 and 4.8% amid all the COVID measures in the country China. It even dropped to 0.4% in July 2022, but this year it went upward slightly to 2.9%, 4.5%, and 6.3%, indicating improvement in the economic conditions in China, and the GDP growth indicates that. Angola's interest rates. The National Bank of Angola kept its benchmark interest rate unchanged at its July meeting, maintaining borrowing costs at the lowest level since mid-2021. Navigate the balance between supporting the economy and addressing concerns about high inflation. The central bank has also revised its inflation forecast upward to a range of 12% to 14% by the end of the year, primarily due to the depreciation of the currency kwanza. In June, Angola's headline inflation picked up to 11.25%, the highest level in 4 months, following the removal of fuel subsidies. Meanwhile, the country's economic growth significantly slowed to 0.3% in the first quarter due to a sharp contraction in the oil sector. Governor Diaz stated that he expects the country's oil production to stabilize, anticipating no major changes in crude prices, while he also expressed a commitment to implementing measures that would prevent significant currency fluctuation in the country Angola. Topic we'll have to look at would be a big question: can being thinner make you richer? Across the developed world, the richer people are, the thinner they tend to be, but the correlation between wealth and weight holds only for women. Why is the question? Alice Fullwood, the Economist Wall Street correspondent, reveals the secret economics of thinness. Let's find out more.
It is economically rational for women to try as hard as possible to be thin.
And each of their activities not only keeps them fit, but provides...
And that is a tragedy. This is the secret economics of thinness. Across the developed world, the richer people are, the thinner they tend to be. This relationship, though, is driven almost entirely by women. This chart shows the share of men and women in France that are classified as obese, and their income levels. Obese women tend to earn far less than their thinner peers, but obese men and thin men tend to earn about the same. The same's true in America, and in South Korea, obese men tend to earn more than their thinner peers. But in each of these countries, richer women are much more likely to be thin than poorer ones. In fact, the correlation is so strong that for an obese woman of average height, losing 65 pounds could have the same impact on her wages as gaining a master's degree. Why is this? Traditionally, people have believed that poverty, which can make it difficult to access healthy foods or find time to exercise, can explain why in general poor people are more likely to be obese. But those arguments should apply equally to both men and women, and they don't. So perhaps the causality runs the other way. It is being thin that helps women to become rich. In many ways, thinness is an economic pursuit. Think of the time and money that women invest in trying to eat
and becoming wealthy. How the correlation happens only for women and not for men, and that a concern because it would be for me to get thinner. I just plan to become wealthier. But it's a report and good outlook from that angle. We'll be going on a short break. When we return, we'll be looking at the commodity markets and intricacies of the market, the price of wheat, how wheat soars as Ukraine deal collapses. Don't go anywhere. Welcome back. It is Business 360. My name is Blyden Ken. Now we'll be talking about the commodity markets. At wheat price soars as Ukraine deal collapses. Wheat futures in the US soared past $6.80 per bushel from the 1 month low of $6.30 touched on July 12 after Russia refused to extend the deal guaranteeing a safe trade corridor for vessels to export Ukrainian grain out of the Black Sea ports. Russian authorities previously signaled that the deal would not be extended past the July 17 deadline due to restriction that was placed on logistics impacting Russian exports, marking an end to the year-long scheme that linked wheat exports from one of the world's top producers just before this marketing year's harvest. In the meantime, the U.S. Department of Agriculture upwardly revised domestic supply and output wheat forecast for the 2023-2024 season, suggesting that recent dry conditions in the key growing region of the Midwest are unlikely to hamper the country's production. The U.S. is expected to supply 66.7 million tons of wheat in the upcoming marketing year, revised higher from 65.3 million tons. And that's the outlook in the agricultural market. Let's move to the market quickly and see what the prices are for soybeans, wheat in the market this morning, the agricultural market. The agricultural market has given some outlines for the morning market with some volatility for some of these commodities. Soybeans has gained 13.25 points this morning, a 0.9% appreciation. Current price for soybeans is $1,493 per bushel. For wheat price is at $681 per bushel, 19.82 points gain, a 3% appreciation. Palm oil, on the other hand, has gained 54 points, 3,935 Malaysian ringgit per ton is the price of palm oil. Let's also see a second part of this agricultural market, what the price of coffee or cocoa rice would be. Well, indications for cocoa has been that cocoa has gained 54 points this morning, $3,361 per ton is the price of cocoa, a 1.63% appreciation. Coffee has gained 3.2 points this morning, and rice faces a slight decline in the morning market. Also to other markets, the energy market this morning, what the price is for crude oil. A slight decline for US crude, the West Texas Intermediate crude, 1.414 points decline, while Brent, which is Nigeria's price benchmark, has dropped by 1.22 points. $78 per barrel is the price of Brent crude, and $74 per barrel the price of WTI crude, the US crude. Coal price has gained 3.65 points, $181.65 per ton is the price of coal. Now to the metal market this morning. What the metals are saying this morning, first on the view would be gold. Gold has gained 4.5 points, market is moving quite fast. A 0.23% appreciation. For gold price, it's $1,959 per ounce. Silver, slight decline this morning. Copper, a slight decline too. Steel has dropped 27 points. 3,711 Chinese yuan per ton is the price of steel. But for silver, it's $24 per ounce. That is the outlook on the commodity market. Let's talk about the forex market, foreign exchange. Beginning with the dollar. The dollar index held below 100 today after losing more than 2% last week and sinking to its lowest level in 15 months as softer than expected U.S. inflation data raised hopes that the Federal Reserve may be close to the end of the current monetary policy tightening cycle. Still, the U.S. Central Bank is widely expected to raise interest rates by 25 basis points this month, while traders scaled back bets of further rate increases this year. Market pricing also suggests that the Fed could start cutting rates next year. On data front, data showed that U.S. consumer sentiment hit an 82-year high in July. Investors now look ahead to U.S. retail sales, industrial production, and housing data this week, as well as corporate earnings report from major U.S. firms. Let's move to the market and see what the prices in the market are as the dollar held at over 1 year lows. The euro against the US dollar market this morning. The market this morning has shown some positivity, slight positivity for euro as well as the pound over the US dollar. The struggle continues for the dollar in recent times. 1.12 point mark is the price level for the euro against the US dollar. For the pound, it's gone up to 1.3 points. Well, let's look at the state of Nigeria's naira against the majors also, how the performances have been. 775 naira equaling $1. For the euro against the naira, it's a downward decline for the euro, but a slight one, a negative 0.6 point decline. 870 naira equaling €1. This happened at the close of Friday's market. Still at the close of Friday's market for the pound against the naira, it had dropped by negative 1.45 points. 1,017 naira equaling £1. And the struggle continued for the pound. Later in the day, we'll see if there will be improvement for the naira or for the majors. Now to the black market. Let's see the standings in the black market this morning, how naira is performing in the paro market. The dollar to naira price is 825 naira at the buying rate and 810 naira at the selling rate. The pounds to naira is 1,110 naira to £1 at the buying rate and selling rate 1,090 naira to £1. The euro to naira indicates 910 naira to a euro, the buying rate, and selling rate 885 naira to a euro. Let's talk about the cryptocurrency market. The state of crypto. Well, the cryptocurrency market has shown some decline this morning, though there's still volatility for Bitcoin, but it's on the negative. 104 points drop for Bitcoin this morning. 30,208 US dollar is the price of one Bitcoin. Ether, it's $1,915 for one Ether, downward by 16.3 points, a negative 0.84% decline. Binance has shown 6.9 point drop, a negative 2.72% decline. Cardano, Solana, Ripple, all on the negative on the daily time frame, but on the weekly time frame, Solana and Ripple are gaining. Here we draw the curtain in today's edition of Business 360. My name is Vladimir Kim. Thank you for being a part of it.